Tesla jumped 10% in one day, ending the day just a little over 8%, as the robotaxi launch in Austin on Sunday went extremely well and according to plan. So Tesla launched its robotaxi. As I said before, it's not a one-day event. This is going to be a progressive rollout. They're going to start with 20 Model Ys and invite certain influencers and people in the finance space to try it, and then they're going to slowly roll it out to the public after each phase of that rollout passes, and then hopefully they're going to roll it out to other cities. And then the goal, obviously, is to roll it out nationwide. At this price point, Tesla is comfortably above that 1 trillion market cap mark. However, at a 2 trillion market cap, Tesla's stock price would be around 637, 638. And in my opinion, I think Tesla can get there within the next year or two. Now, the reason that Tesla spiked 10% intraday was a couple of things. I talked about this before, but think about this. Everybody who was already bullish on the stock was already in, and we were consolidating above that candle where Trump versus Elon had taken off, and the stock dropped 14% in fears that Trump would no longer greenlight Tesla's ability to roll out FSD and robotaxi nationwide. Once they sort of made up, you could see that the price was comfortably sitting above that candle. However, like I said, everyone that was already bullish was in. What about the rest of the market? Did they price in robotaxi? Or was it more of a wait and see moment? And then once the initial stage of robotaxi ended up being successful, then we had big buyers jump in. It is likely the latter, that there was a wait and see moment from the rest of the market, because Tesla, let's be honest, if we're being honest, is not great at punctuality, is not great at keeping promises. So when they actually saw videos of people riding around Austin in robotaxis, calling up robotaxis from their app. So not only were the cars retrofitted with the robotaxi technology, but the app was also working flawlessly. And for those that always wondered, why is Tesla a $1 trillion company, $1.5 trillion company, even a $2 trillion company? It's because the market has priced Tesla in at various times as more than a car company. Now, tell me this, if the robotaxi rollout completes successfully and we start seeing them in cities, not just to 10 or 20 influencers, but actually to the masses in many American cities, then are you going to still think that Tesla is just a car company? Of course not. Now, although what Waymo did was super impressive so far, they don't have that many cars on the road. The current Waymo fleet is estimated to be 700 to 1,000 vehicles across its market, and it has an annual production of around 1,500 vehicles. In 2024 alone, Tesla delivered 1.81 million vehicles globally. And if we take a look at a conservative estimate of production, we could see that Tesla can produce around 500 to 1,000 vehicles in the same time that Waymo can produce one vehicle. Now, you might say to yourself, there are hundreds of thousands of Uber drivers worldwide, if not millions. Does that pose a significant competition to Tesla? In my opinion, the answer is both of these services can exist simultaneously, but eventually I think that the world is going to go autonomous. Think about this. You don't have to pay anybody. Driverless cars don't necessarily have to take breaks. They can really operate 24 hours a day. Less if you count in the time it takes to charge those vehicles. Passengers will not have to tip anybody on these networks, and I'm sure that if they were given the opportunity between a robotaxi that they don't tip and a driver that they have to tip 20-30%, they are likely going to go with the robotaxi if it's available. So as long as this is successful, the only real challenge is the different regulatory bodies in the different states and also in the different countries, because obviously they want to roll this out in Europe and Asia, etc. But we know that the market is a forward-looking tool. So what are they pricing in going forward? I can easily see Tesla get back to that 485 range, if not higher, towards that $2 trillion market cap within the next couple of years. Obviously, barring any issues with the robotaxi rollout here in the next month. Now, in terms of technicals, I did think there was a possibility we would sweep these lows, as I said in my last video, before a move higher, but I was already in calls. And as a matter of fact, these calls were down 30% as we were consolidating here and we closed those calls out for the highest market that we closed them out for was 50%. I'm going to hold on to a runner position here to get to those to those 370 equal highs. And ironically, the next target after that is 420. In my opinion, Tesla is a buy on pullbacks. And if you are good with options, you can definitely strategically continue to play options on pullbacks to major levels. Obviously, I will be sending those out in the Discord, just like I sent those calls out in the Discord as well, and even told you guys about these on the video. If you want access to all of my plays in real time and you want to trade live with me every morning, link is in the description below. Come and join me. All right, let's talk about HIMS, because this is one that I'm going to get a ton of questions about. So when I made my last video, I was saying that HIMS is in this bear flag, in this bull flag here. You can make a case that this is an upward channel that might break to the downside if tested. However, in one day, HIMS suffered a black swan event. So here's what happened with HIMS. Do you remember when HIMS hit a high of $73 back in February? If you remember why that was, it was because they were allowed to sell a compounded drug. That compounded drug was called semaglutide. Now, this compounded drug is the same one that is in Ozempic and Wegovy, if that's how you pronounce it. Now, when it dropped from $73 all the way to $23, it was when the FDA put a ban on companies mass selling semaglutide. They allow companies to sell it in very specific cases as deemed necessary for the patient, but they cannot just mass sell it as if it's Ozempic or Wegovy. And that is when the stock price tanked to 23. Now, if you remember, when the stock price ran back up to 67 was that partnership with Novo. Novo allowed HIMS to sell Wegovy. Novo makes Ozempic and makes Wegovy, and they directly supplied Wegovy to HIMS and allowed them to sell it on their website. Over the weekend, just a little over a month after that partnership was announced, they terminated the relationship with HIMS. Now, the reason they terminated the relationship with HIMS is because HIMS continued to illegally, according to Novo, continue to illegally mass sell semaglutide. If HIMS and other telehealth companies are selling semaglutide as sort of a generic version of the drug, even though it's a mass-produced compound, but they're selling it as if it's a generic version of Ozempic or Wegovy, and you can imagine it is much, much, much less expensive. That is obviously a risk of competition to Ozempic and some of the other obesity drugs. That is why Novo terminated their partnership to them. So they cannot sell semaglutide legally, and now they can't sell Ozempic or Wegovy. Both of those drugs are produced by Novo. So in my opinion, HIMS is an extremely risky investment at this point because of the fact that we've seen it priced in the 20s twice already when it did not have access to these obesity drugs. Now, obesity, the total addressable market is expected to be around $95 billion annually. Now, just for good measure, I actually asked Grok to see what are the prospects of HIMS making a deal with Eli Lilly, because Eli Lilly sells two other obesity drugs, Zepbound and Mounjaro. So can HIMS make a deal with Eli? Like, what are the chances of HIMS making a deal with Eli Lilly to sell those two drugs? And here's what Grok said. It said, HIMS has continued to sell compounded semaglutide, which Lilly and Novo view as copycat or illegal mass compounding, especially after the FDA removed it from its shortage list in February of 2025, upheld by a court ruling. Here's what's worse, and something I didn't even know, that on April 1st, HIMS announced it would sell Zepbound and Mounjaro, leading to a 5% stock surge. However, Eli Lilly came out and basically said, I'm not with her, and mentioned that they have no affiliation with HIMS and no formal partnership. So in my opinion, the risk to HIMS, there are quite a lot of risks here, right? Not only are they priced out of the obesity market for the time being, but there is potentially brand damage from lying, not only selling semaglutide apparently illegally on a mass-produced scale when they weren't supposed to, but announcing a partnership with Eli Lilly when they actually didn't have one, not to mention the barrage of class action lawsuits and fines that it could incur if the accusations of it selling semaglutide on a mass scale are true. Now, the HIMS CEO is a smart guy, so I have no doubt that HIMS is actually trying to go after another producer of obesity drugs and is trying to find a way to potentially sell an obesity drug. But I'm not really in the business of holding a stock in hopes that that happens. And I've already seen what HIMS is priced at without it selling obesity drugs, and that is in the 20s. Currently, it has a 62 PE ratio. That is a little high for my taste on a company that is facing such risks, in my opinion. I do think there's a place for telehealth, but I don't see the value in paying for an overvalued company at this price point if there are all those risks there, right? Like, the company has to be asymmetrically cheap for me to want to really buy and hold this in large quantities. I do think there might be an interesting play if it gets back to this trend line here at around 33. There might be a way to sell cash secure puts. It's a cheap stock, maybe run the wheel strategy on HIMS, but I'm not interested in really taking a large position here. This is just a good reminder that we always talk about overarching black swans, but individual stocks can have black swans as well, and this just happens to be an example of that. Anyway, traders, quick little video while I'm on vacation. I just wanted to update you guys on Tesla and HIMS. Let me know your thoughts on both of those stocks below. Do you think Tesla has more runway? Are you encouraged by what you saw in the robotaxi rollout so far? What do you think about HIMS? Do you think that this is an overreaction? Would love to hear why. I like to hear different perspectives, especially if I don't have those perspectives yet. So let me know if you think it is, if this is an overreaction and why that is, and what you think HIMS plans are for acquiring the rights to obesity drugs in the future. Anyway, traders, if you want to trade with me live every day, the link is in the description below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace. When I first started trading was expensive. We did not have commission-free brokers. And then with the advent of commission-free brokers, I thought, cool, I'm not paying anything to trade. It's actually free. What I didn't realize is that most of these platforms still charge hidden fees. Think contract fees, regulatory fees, etc. And that's one of the main things that attracted me about public.com and one of the main reasons that I moved there. The fees for stocks and options ETFs are offset by the rebates that you receive. And the more that you trade, the higher the rebate. In other words, instead of paying a fee for stock options trades or even on commission-free brokers, in this case, you are actually earning something. It flips the entire model on its head. Aside from that, Public has such a clean and modern trading experience built for actual traders. So not only do you save money, the tools are great. What more do you need?